Everyone. This is Brad Matheny again, coming to you with a brief little update here. The S&P is making a pretty dramatic move downward. We're starting to see some real weakness here. Japanese market is down, German market is down, UK market is down from where they were. They were up very strong earlier today. Dow Jones is down 500 points, Nasdaq is down almost 300, S&P is down 5. And I wanted to talk to you guys about, you know, some of my work over the last couple of days. So a lot of you found me again. I posted a lot of videos on TradingView. I welcome you to go check them out. There's literally hundreds of videos related to my research and training and techniques that you guys can use to understand what the markets are doing. But what's most important, at least what I wanted to talk about right now, was this. So you remember back here on the 14th, and I'll take a look at this January 14th volatility, right? I'd highlighted at this point that the SPY was up near a peak and was going to come down, bounce, and then roll back down into a deeper trend. So the point behind this is I had predicted we were going to get into a big volatility breakdown, rally back up. I thought we could get into this roughly 60-70% pullback area and then move into a big breakdown. And, that was what, 2 weeks ago, about 2 weeks ago. And how did I know? Well, it's not that I knew, it's that I have, advanced techniques that I can use to try to determine what's actually going to take place or potentially take place. Sometimes they play out perfectly, sometimes they don't. But this is the advantage I like to use to try to take advantage of future market trends. So, obviously I was shorting up near this area, had a great profit, bought down in this area, wonderful, sold up into this area, got out of it, waited, started positioning for a put breakdown in the market, and now the breakdown's actually happening. You can see a better example of it here. This was on the 14th. Um, Actually, here's the first prediction. You can see it right here. Update, get ready. That was created on the 11th using my predictive modeling. And so I highlighted we would break down, we would rally. And in fact, this is, if I can, yeah, topping pattern January 21st to 25th. Okay, it extended out a little longer, created an excess phase peak pattern, which you can learn in my videos. And now we're in this breakdown phase. So what's really cool about this, at least in my opinion, is it played out perfectly. I mean, literally perfectly. So you need to understand that we're looking at a very solid breakdown. It's played out perfectly. You can see my example here on the 18th. This is what it's going to look like, breaking down, coming up, coming back down into a deeper rotation. These are double bounce off of BTC, which didn't happen because of this breakdown. Here's a trade setup, update morning video. And then here's a update from the 29th, 22 hours ago, indicating a moderate breakdown. Here's an example of what happened. So there's the peak, there's the 14th low, there's the rally, and there's the breakdown, coming down into a big breakdown. So now we come over here, we take a look at where we're at, and let's just go over some of the data here, okay? There's the breakdown from these highs. We're already down 1.13%. It's not substantial. I think we have to get below this level right here, 687 to 685, to see a substantial downward move. I think that's coming, pending. Could happen today, but I don't believe so. Today's pattern is a carryover pattern to the downside. I can share that with you here. Today is a carryover pattern, meaning it's going to carry over from yesterday's downward move. We're in bullish trending. That's likely to break downward over the next day or two. We're getting a pretty solid breakdown. But look at the S&P 500, much more aggressive breakdown here. And again, we need to get through pretty much this level to see a real breakdown. To me, that means, and that is a Fibonacci critical level. I call it the defense level, which is right here. To me, that means that we are now in a full-on breakdown mode. We stay above this level, we're just in a moderate breakdown mode. Take a look at the NASDAQ, do the same thing. NASDAQ here off of this low, we would do the Fibonacci levels from here up to here, and that would indicate that we have to get below this low, which is the defense levels, indicating a very strong breakdown potential. So we're right now dancing around a very big breakdown. Okay. Now, if you take a look at these other longer term levels, I can tell you that you use the same Fibonacci technique. You come here, you come up to this level, and now you look for those defense levels. Here's the defense level, and here's the defense level. So at this point, we are already below this defense level right here, indicating that we are now in, as far as this Fibonacci range, a broader breakdown phase. We are moved past what's called the defense level. That's where market is likely to hold up and continue trending upward. We're below that already. If we close below this level today, we're going to be in a fairly dominant downward trend, likely potentially targeting this level here, these lower defense levels. Now, Dow Jones is kind of interesting because the Dow Jones has a definite range here. We're already below this level, this double bottom, very key support level. We're already below the defense level here and targeting this defense level here. That puts us at a primary target here. But now we also have this double basing bottoming, which I'll say from here to here. And you can see the defense level here and here. We're already below that level. If we continue to break down below this lower red line right here, this is going to be a solid breakdown. And that means that we're going to be potentially targeting this lower level as a big solid breakdown. So pay attention, guys. This is very clear, very simple. You notice I'm not using any indicators. You don't need them. Price tells you everything. And that's really the focus of my videos, is that price tells you everything you need to know. Now, obviously, like I said, some of my tools, like my predictive modeling and stuff, provide a bunch of extra info. But in theory, price tells you everything. Okay, guys, so this is where we're at. This is how it's playing out. And we're looking at a pretty solid breakdown here. Okay, you can take a look at gold and silver continuing to move downward. I'll give you a little hint here. Gold and silver should target these lower levels. Gold should target this, call it $4,600 to $4,900 level, and silver should target this 82.50 area to say 90 area as support. Really, the lower support level for silver is right around this area, $86, 86 and a half. So, everybody out there is guessing, where's it going to go? Where's it going to go? Well, I'll tell you where it's going to go. It's created an excess phase peak pattern. You can learn that from my videos on TradingView. It's come down into the consolidation phase area right here. This is perfect. We're going to find support roughly right above $90, maybe an 88, 87 area. We'll find support. We'll trend sideways and maybe break down to the $72, $71 area. Otherwise, we're going to find support right over here in this area and rally back out of it, which is the much more likely outcome. Same thing here. Gold will come down, find support, and rally back up out of it. Okay, and that's it for the update. Happy Friday. Hope you guys are getting some. And a little hint, by the way, natural gas created an inverted excess phase peak pattern. I just created a video about this. This is a really great trade, in my opinion. So look, inverted, there's the excess phase peak flagging. The blue upper flag level, the blue lower flag level. We are just now breaking below this level. You see how we're down here at 1677, which is, again, inverted. You see how we're breaking that flag level? Wow, that's a good breakdown. Now, what it means is that we will move an equal distance from this flag range. See the high-low range? We're going to move an equal distance to here, run into a consolidation phase, then potentially break down to what's called the ultimate low, which is another equal move down. So this means that when you uninvert the chart, natural gas or UNG is very likely to rally up to 20, 21 bucks, stall, and then rally up to 24, 25 bucks or higher and reach a peak right up in this area. Big, beautiful move. Now, how did we know this was setting up? Well, these deep lows were a very good indication. I was buying like a madman down in this area, knowing that this is likely going to be the case. But this is playing out just beautifully. My natural gas positions are, you know, 2, 3, 400% at this point. And there's still a lot of room to go. So, FYI, this is how you get some. Okay, that's it for now. Talk to you later.